Hey, it's Natalia Toredo here, and today we have our friends from Tomo Mortgage. We have James McTurnan, our dedicated loan officer, and Reed Howland, the business development manager. Thank you very much for being here with us today.
Thank you for having us.
Thank you, appreciate it.
So our clients are loving to work with Tomo, and we are here today to go over a little bit what you are doing and talk a little bit about mortgage. But before we jump to all the questions, can each one of you talk about yourselves?
Sure. Reed, you want to go first?
Yeah, absolutely. So I am the business development manager for Tomo, specifically, obviously, for the Matt Haistings real estate team and yourself. Before Tomo, I was at Zillow. So I worked with real estate agents like yourself. I worked with obviously selling real estate leads, but also working with agents on how to convert those leads. And obviously that's why I meet up with you on the day-to-day and help with that, help with the coaching of that, and help with the team as well.
And I'm a senior loan advisor here at Tomo. I've been at Tomo for a little under a year, but since Tomo's only about a year old, that's kind of a long period of time. I've been a mortgage loan officer for about 12 years total now.
He's been in it for a while. He's seen it all.
Yes.
So let's start to talk a little bit about the mortgage itself.
Sure.
Most of the buyers does not know the first step is to get, when you're shopping for homes, is to get pre-approved. Talk a little bit how to get pre-approved.
Sure. So with every lender, it's going to be a little bit different. But typically what the lender wants to do is ensure that you qualify for the mortgage. So they're going to look at your credit, your income, and your assets are the three main things. And how I guess the process typically starts with most lenders now is you go on an online application, fill out your basic information like where you live, where you work, how much money you have, and then upload some sort of documentation to verify the information as far as pay stubs, bank statements, W-2s and things like that. And then it will be submitted to either a loan officer or an underwriter to review the information and essentially ensure that you meet the qualifications for that loan amount.
So the buyer can do everything online and fill all the information online, correct?
Yeah, so for Tomo specifically, they would go to our website or we could send them a link personalized for them where they go in, they start filling out their information. What Tomo is a little unique with is we also have what's called a pre-approval advisor. So they will call any person who is going through the online application and walk them through any questions they may have and also help them with uploading any sort of documents or answering any initial questions that they have.
No, that's perfect.
Yeah.
And once they get prepared make the application online, one of the main concern of the buyers is if the credit score is going to be hit.
So at Tomo right now with our pre-approvals, we only do a soft credit inquiry, which does not show up as a credit inquiry in your credit history and has no effect on your credit score whatsoever. Once we get further in the process, we would need to do a hard credit inquiry. And there is kind of misconceptions out there about how that affects a person's credit score. It is true that credit inquiries will lower your score, but it depends on who is inquiring about your credit. If you are applying for multiple credit cards or multiple short-term loans or things like that, that is definitely going to lower your credit score. If it's a mortgage or a car loan, there's an understanding that you're shopping around with different lenders, so it doesn't hurt your credit score nearly as much or at all as those other type of inquiries.
Yeah, that's very good to explain for the buyers, so they're not afraid of making the application online and get pre-approved to start their home shopping.
Correct, yeah. So for the pre-approval with Tomo, soft credit, no effect on your credit inquiry, on your credit score. If we are doing a hard credit, I actually recommend people go to the FICO website. FICO is a company that does credit scores. Their website is myfico.com, and on it they have this question and they give their legal answer saying, mortgages should not affect your credit score, but it may affect it 1 or 2 points or something like that. So I can't say that, but they can since it's they're the ones doing it.
No, very good. And once the buyer make the application online, how long it takes to get the pre-approval letter?
It depends. For someone who has what we call pretty straightforward application, as far as they work for someone else who gives them weekly pay stubs and W-2 salary, and their money is sitting in 1 or 2 accounts. There's not anything too complicated about it. We should get the pre-approval letter within about an hour. If it's something that's more complicated, like a self-employed borrower who has, owns multiple properties and it takes longer to review, that usually could take a day or maybe 2 at the most, depending on how complicated it is.
Oh, perfect. So it can be very quickly. It depends of their situation, and it's case by case.
Yeah. I mean, it also depends, I guess, a little bit on timing. If someone uploads everything on a Friday night at 11 o'clock, it might be a little bit longer than if they upload everything on Monday morning at 9 a.m. But yeah, usually we should try and get them within an hour, and if it's urgent, then we will make it a priority to make sure it gets out as quick as possible.
Okay, awesome. And once they have the pre-approval letter, how long this pre-approval is valid for them to start shopping?
So it is valid for 120 days. Okay. That's typically because the credit report that we pull is valid for 120 days. What I also like to say is that it's basically valid as long as nothing changes. So as long as you don't stop paying your bills and your credit score goes down, or you lose your job and your income changes, or you change your job, then the pre-approval should still be valid, and they should feel comfortable that they still qualify for it.
Okay, perfect. Yeah, that's very good to know. Yeah. So my question for you is, how much they need to put for down payment?
Mm-hmm. So it depends. Our typical standard minimum down payment requirement is 5%. We also offer 3% down payment options. Those are part of our affordable lending program. So the underwriting requirements or the requirements for the individual buyer might be a little bit different. For example, they may need to be a first-time home buyer, or they may need to take home buyer education classes, or they may need to be below a certain income limit for the area that they're buying in. But at the absolute minimum, it's going to be 3%, but more often it's 5%, I would say. And then on top of that, they need to also factor in closing costs and other costs of moving and things like that, which what we do normally is when we do the pre-approval, we also generate what's called a closing cost worksheet, which is going to have an itemized list of all their estimated closing costs. So the buyer can see a very strong estimate of how much cash they're going to have available in order to actually buy the home.
Okay, so it's a very clear process because you give the buyer all the numbers, so they don't have any surprises at the end.
Correct, yeah. So they should be very aware of every cost that's associated with the mortgage. You know, when they do a pre-approval, we send the closing cost worksheet. Once they enter a contract on a property, we send a loan estimate. Loan estimate is just a more official, standardized version that every lender needs to send every buyer that they're working with, so they can compare different lenders. Yep. And there's actually different tolerances that if costs increase, then the lender could be responsible, and that's maybe probably don't want to get into compliance, things like that. But yeah, they will have a very good idea of how much money they need. And then, but I'm sure you're aware, and everyone's aware, is buying home, there's going to be other costs they incur. Yes. You know, buying new furniture, all that, and that's another can of worms.
So this, for down payment, you mentioned anything from 3 to 5% minimum, depending on the situation. Yep. But explain a little bit about the difference of conventional loan and a jumbo loan.
Sure. So a conventional loan means it typically means it follows Fannie Mae or Freddie Mac underwriting guidelines. Most lenders do want to sell their loans to Fannie Mae or Freddie Mac. Okay. This way they could have more money to lend to the next person. Fannie Mae and Freddie Mac do have maximum loan amounts depending on the area that you're buying in. Okay. If the loan amount is above their maximum, that's when it's called a jumbo loan. Okay, so in a jumbo loan, usually buyers are required to put more money for down payment. Yes, so Tomo offers jumbo loans also, our minimum down payment for a jumbo loan, assuming it's your primary residence, is going to be 20%. Okay. There are also going to be different underwriting requirements as far as assets that you need outside of closing and things like that, but we could have a more in-depth conversation with individuals about that because everyone's going to be a little bit different. Okay, perfect. I know there's many different kinds of loan programs. So we spoke about conventional, we sneak peek a little bit about jumbo loan, and what about investment loan? Sure, so yeah, from I guess a mortgage standpoint, there's 3 main types of mortgage: your primary residence, a secondary or vacation home, and an investment property. Okay. Each one of them is going to have different underwriting requirements as far as what the minimum down payment is, what the minimum credit score is, and they're also going to have different interest rates. Typically, a primary residence is going to have the lowest interest rate, then a second home is going to have the middle of the 3, and the investment property is going to have the highest interest rate just because it's considered more risky from a mortgage lender. So the buyer got the pre-approval letter, they found their dream home, made an offer accepted, everyone is happy. What happens then? What is the process of underwriting? Yeah, so once they enter contract on a property, usually there's kind of 2 avenues that we're following. We're going to underwrite the property that they're buying as far as ordering an appraisal to make sure we understand what the actual value of that property is. And we're going to interact with the title company who does research to make sure the person who owns the property actually is able to sell it to you legally. So when you actually take ownership, it is your property and there's no one that can challenge that. From the borrower side, that's when we start working with underwriting to approve all the documents that they've already provided if we haven't done so already. Sometimes we do that up front depending on the situation. So underwriting would review all their documents as far as bank statements, pay stubs, assets, and if they have any additional questions after review, they'll let us know. But usually the process at Tomo usually takes about 2 to 3 business days for underwriting to review and get back to us. Okay. Normally our initial goal is to get what we call a conditional approval with their first review, meaning underwriting has approved your mortgage pending some additional items. Usually those additional items are things related to the property because those take longer to get back. And also if we need any updated information from the borrower that we just don't have yet. Usually underwriting will only issue a conditional approval if they're confident that the loan will be approved, that the things remaining are minor things that the borrower or buyer can provide, and there's no risk that the borrower won't be approved down the road.
Okay, perfect. And what time during this process the interest rate is locked?
So typically you cannot lock an interest rate until you enter contract on a property. The main reason being is that we lock for a certain period of time, usually 30, 45, 60 or longer days. We want to make sure that we're locking for long enough that it's going to carry us through the closing date. If you're not in contract yet, we have no idea when you'll actually enter contract or when the closing date will be. Tomo actually does have a somewhat unique product though, it's called Lock and Shop, where we can lock you once you have a pre-approval for 90 or 100 days or 120 days, which gives you time to actually go out, shop, find a property, enter contract, and then close all within that time frame.
That's really amazing.
It is a good product. Some other lenders offer it, but I think ours is a little more competitive because we do charge an initial deposit up front of $500, but that is then credited towards your closing costs, where other lenders usually charge just a fee for this option, or the lock and shop rate is much higher than what we might be able to offer.
Yeah, that's really amazing, especially in this market where we kind of don't know where the interest rates are going.
Exactly, yes. I think of it almost as insurance. If someone wants confidence that they know their rate is not going to change, it's a very good product for them.
So there are a lot of opportunities for buyers to make mistakes during the home buying process, especially when dealing with the loan, mortgage, and all this process. And our goal, and Tomo's goals as well, is to do a hassle-free experience for all our clients. Tell us a little bit, what are the mistakes, the most common mistakes that happens during the loan process?
I would say probably the most common is if someone who gets pre-approved, if something changes with their, I guess, qualifying ability and they don't notify the mortgage lender before then they take that pre-approval and go make an offer. For example, if someone has a salary job that they're getting consistent same pay stubs every 2 weeks and then decides to switch to a commission job or something that's just paid slightly different, even though they may be making the same amount of money, from a mortgage standpoint that's much different and could affect their ability to actually qualify for the loan. So I think people need to understand that the pre-approval means you qualify and are pre-approved based on the information at that time. If something changes, you need to make sure that the lender and the real estate agent and everyone is up to speed on that. It's not going to say you can't get the mortgage still, but you want to make sure it doesn't hurt the ability to do so.
Okay, perfect. Yeah, and there are a lot of buyers that gets pre-approved and then go shop for cars.
Don't do that. Yeah. So again, we pull the credit report. At Tomo, there's, I guess, more to consider with this because since we only pull a soft credit report when we do the pre-approval, when we move forward, we have to do a hard credit inquiry, and that's a new credit inquiry. So if there's any new debts on there or new payments or whatever, that's going to be factored in, and if it could affect your ability to be approved for the loan. So don't finance anything, don't buy anything too expensive unless you talk to your real estate agent and your mortgage loan officer first. Some people it won't be an issue for. Other people who are towards the top of their budget, it could really, really affect them negatively.
Yeah, that's a good point, and it's gold.
Yeah.
What can we do to make sure all the process is very smooth?
From the buyer side, I think just asking as many questions about anything they have as possible. Some people kind of, I don't want to say get afraid, but they get a little timid, especially if they have a lot of questions, and then it comes up later on that they didn't understand things or something like that. So we want to make sure that my most important job is making sure the buyer 100% understands every aspect of the mortgage, and I can't always know if they do or don't unless they ask questions. Be as upfront as you can be. If you're buying a vacation or investment property, don't do the pre-approval telling me it's going to be your primary residence, because that could cause an issue. Or even if something you might not realize, like if you're getting a gift from your aunt, but it's actually going to be your friend, make sure you keep us updated on that, because that could change things as well.
Okay, be clear.
Yeah.
On everything since the beginning.
Yes.
And one of the things that I love about you guys that you are very responsive, especially during the weekends where most of the buyers are shopping and looking for homes and wants to clarify a question or wants the response right away, just to feel comfortable about moving forward. And you guys are always like very responsive.
Yeah, I mean, every client has my direct cell phone number, so they can get in touch with me as, hopefully as quick as possible. Obviously, we all have lives outside of work, so if I'm going to actually be away and responsive, I'll let any client who I know might need my attention know who to contact. One thing that Tomo does that I don't think any other lender does is that our CEO personal cell phone number is on every pre-approval letter that people get sent. So if you really need to get in touch with someone, you can contact him. So that give us a little incentive to make sure that everyone is going to respond to as quick as possible.
Yeah, that's pretty amazing.
Yeah.
So for a buyer who is shopping for lenders and is still not decided, what is a good advice that you can do for this buyer? Like how can they choose for the best lender?
Sure. I think there's, two main aspects of that. One is the financial aspect, their fees and their interest rate, and two is your comfort with the loan advisor. You want to make sure that you trust them, they're answering your questions clearly, they're responding to you in a timely manner or letting you know when they can't respond to you in a timely manner, and that should help give you confidence that the whole process will go smoothly. Because once you enter contract, that's really when things need to start moving more rapidly sometimes to make sure we meet the closing date. As far as the financial aspect, obviously everyone is going to look at the interest rate, but there are other things that you want to factor in as well, because some lenders will charge what we call lender fees, so an origination charge or an underwriting charge or a processing fee, which depending on the lender could add up to thousands of dollars for some lenders, whereas Tomo does not charge any lender fees. So one thing we always want to look at is if our interest rate is slightly higher than a different lender, but we don't charge any fees, how does it actually compare to each other? At the beginning of the process, we'll provide the closing cost worksheet, which has this information. Once you actually enter contract on a property and we provide a loan estimate, I'm more than happy to review our loan estimate compared to any other lender's loan estimate. And if they actually are providing a better offer, we will match their offer.
Oh, that's pretty amazing.
Yes.
Yeah, it's good to know.
And it's, important to note that when you're doing a pre-approval, you want to look at the interest rate. It's important, but every lender's interest rate is going to change every day, if not a couple times throughout the day. So even though we might be lower or higher today, if a month from now you enter contract and we're locking a rate, you still want to check in and make sure everyone's still competitive to where they were then.
So let's talk more about Tomo and how you guys are different.
Yeah. We have an amazing website. It's very user-friendly. Your buyers can jump onto hellotomo.com any time of the day. They can take a look at our live rate page. They can plug and play. They can type in a couple different key factors, whether it be a primary residence, an investment property, if they're looking for a 2 to 4 unit property. They can put in their own credit score if it's 660 to 700, 740 above, purchase price of home. They can plug into these different factors and it'll actually give them a couple different options as far as different rates go. So that's an amazing starting point. It's extremely user-friendly. It gets updated every couple minutes, that rate table, so you can see at real time what our rates are gonna be at. That right there gives you an amazing advantage and starting point to start your loan process, to see what your monthly payment's gonna be, at least with the principal of the loan and the interest included on it. Obviously, you have the insurance and taxes that you have to dive into, and that's why James is an amazing resource for that. But something that Tomo does extremely well, aside from those low interest rates, when you compare us to other mortgage companies, is our low costs. We're extremely low cost on the back end. We wanna save your buyers as much as possible. Right? When you go to the closing table, when James sends over that closing estimate, that statement, or that loan estimate, we want to make sure that your buyers are saving as much as possible. A lot of buyers and people, they think, okay, I'm going to put 5% down, 10% down on this home. If it's a $500,000 property, 10% down, that's 50 grand. But they don't think about immediately the closing costs that come on with that loan, the property taxes they have to prepay, the insurance they have to prepay, the loan origination fees. Right there, we're gonna charge $0 for loan origination. That's gonna be a big zero on the closing statement. It's gonna save your buyers roughly around $1,500 in cash at closing, straight off the bat. We're always trying to find innovative ways and new promotions that we can do for your buyers that are gonna save them more money at the closing table aside from just that down payment. Something else amazing about Tomo is our appraisals. And I know we'll get into that as well. For you guys as agents, the appraisal turnaround time, when you order an appraisal, once your buyer goes under contract, they will order an appraisal on that property to see what that market value is. We have a very quick turnaround time. We want to make sure that that loan's going to close on time and that we're not going to be waiting on an appraisal to get back to us to close on that loan. So we're very quick with that. We just launched today appraisal coverage. Appraisal coverage, if that appraisal comes in low, we're going to cover that. So now your buyers don't need to worry about bringing extra cash at closing. And obviously, when you speak to your buyers, you can get a little bit more in depth on that. But we wanted to let all of the people that you're working with know that if they purchase a home at $500,000, or at least they're under contract at $500,000, you will go ahead and order that appraisal for them. If that appraisal comes in low, typically the buyer's gonna have to actually bring and pay that difference, right? If it comes in at $490, they're gonna have to bring another $10,000 to closing. Tomo, we just announced that as long as it's a 10% down payment, we're gonna go ahead and cover that. We're gonna absorb that risk, and your buyers no longer have to bring another $10,000 to closing if it is $10,000
Wow, that's
less.
pretty amazing.
Exactly.
Well, especially for the top homes that are selling above asking price, and buyers have to make an offer with a concern about if it's going to appraise, it's not going to appraise. That's excellent for them.
And I mean, at the end of the day, appraisals, they usually only come in lower 5 to 10% of the time. It's not a huge amount, so your buyers don't have to be worried about it by any means, but it's just gonna give your buyers the extra confidence they need to shop around, not have to worry about that appraisal possibly coming in less.
Oh, perfect. Well, so about the promotion you just launched here at the Tom Ferry Summit, plus the lock and shop program, so it makes you very different from most of the lenders on the market.
Exactly. I think James hinted on it a little bit, but lock and shop, it's a 120-day rate lock product. Typically, you lock in an interest rate when you're under contract. Lock and shop, you don't need to be under contract. You don't need to have identified a property. It's only $500, but really it doesn't cost anything because it credits back to you at closing, that $500. But yeah, it's a 120-day rate lock. You can lock in an interest rate now by going on our website. You can take a look at what our rates are at. Call James up. He will be all of your buyers' one-on-one personal loan advisor. Lock in that interest rate for up to 120 days. That's 4 months. From now, it's in middle of August. That's end of December, January timeframe that they have to close on that home with the interest rate they see today.
So that's pretty amazing for someone who is concerned about how the interest rates are going up to the end of the year. They can lock right now and just shop for the dream home.
Exactly, and they don't have to worry about having that perfect property yet. As long as they find one in the next 3 months so they can close within that 120-day period, they'll be good to go.
Awesome. And how can our friends and clients get in touch with Tomo?
Yep, so cell phone is probably best for myself. I also work tremendously well with email, but we're always just a couple minutes away from a conversation and would love to connect with your buyers.
Okay, so let's do some rapid fire. How much do you think interest rates will be by the end of this year?
Right now, on average, it's probably about 5.375, and I think we're going to hang out there till the end of the year.
Oh, so you think it's going to be more stable?
I think it's going to go up and down a little bit between now and then, but I think on average, towards the end of this year, it's still going to be in the same price, the same range.
I'd agree with that absolutely. Right now, our par rate, which par means paying no points to lower that rate and receiving no credits to increase it. Our par rate's at 5.375 right now in Plano and Frisco. And I expect it to be around the same. It will obviously have its ups and its downs, and we might see it in the next month or so go up, but I'm sure we'll see it kind of average out and level towards that, right around 5 to 5.5.
How much higher do you think home prices are going?
I have the same opinion. I think they've kind of plateaued, and they're going to hopefully be level for the rest of the year.
Okay.
James and I are seeing eye to eye on this. I think we'll see it kind of level out. We won't see too much of, there's still going to be competition, but we'll see it level out.
And last question, favorite city in DFW?
Frisco.
Plano.
Plano. All right, well, thank you very much, James and Reed, for being with us today. For who is watching us, we appreciate your time. I hope this interview was very helpful for you. And if you have any other questions about mortgage, loans, home loans, just leave in the comment your question and we'll clarify for you. And don't forget to like, comment, and subscribe.
Thanks for watching today's video. Make sure to like, comment, and subscribe below. As always, if you have any questions, feel free to reach out to us. And in the meantime, make sure to check out some of our other videos featured on our channel.